what are the benefits of having an LLC as your main structure in real estate in various states?
Okay, the first benefit that you have, that you get when you have an LLC, is the limited liability protection. But for that limited liability protection, that means that whatever you are in risk, whenever you put in risk in the company or for the company, is the amount of your investment. If anything happens, no one will come after you and your personal assets. So that is a limited liability protection. But for that limited liability protection be effective, the LLC, the limited liability company, needs at least 2 individuals. That's the first premise that you need to take into consideration whenever you're forming an LLC. Usually, whenever you buy property in one state, you are supposed to have the LLC in that state form, because usually the state only allows companies that are registered in the state to do business. So if your strategy is to buy real estate in separate states, many states, ideally you should have one LLC for each state where you are planning or you buy the property. And then all these LLCs will flow or will pass through to a single entity that could be another LLC or an S corporation. We recommend an S corporation, and that S corporation that is getting or is receiving all the income from the LLCs in separate states is the one that flows to you. So we have a structure composed of several LLCs that go state by state, and they own property in that state. And then all these LLCs are owned and flow the profits to the S corporation. And this S corporation is the one that flows to you personally, and then you pay taxes with that. So that's an ideal structure for an LLC. And the benefits, as I said before, is the limited liability protection. Why we suggest this kind of a structure? Because remember, it is not a good idea to concentrate all your assets into one single company. Let's say that you have one company in one state, and then you start registering that company in separate state, or you buy with that company in other states. Then you are concentrating into one single entity. You're putting all the companies into that entity. That is a concentration of risk that if you do not have enough umbrella insurance protection, it could at one point, it could mean that you are not, as a covering for all the risk that you have in this bulk of properties that now you're going to have.